everybody, welcome back to Steamboat Real Estate and Investing, your inside track to real estate, mountain living, and intelligent investing here in Steamboat Springs, Colorado, with me, your host, Brian Cox. Today, we are taking a look at what happened in the Steamboat Springs real estate market during the first half of 2026. And if I had to summarize the market in just a few words, it would be that buyers have more choices than they've had in years, but well-priced, well-positioned homes are still selling remarkably well. Inventory is growing and negotiations have become more balanced than they've been in years, yet values have remained surprisingly resilient. Let's dive in. So let's start with a few key takeaways. Inventory continues to expand, creating more opportunities for buyers. Homes are taking a bit longer, specifically single-family homes, a bit longer to sell, but well-priced homes continue to attract strong offers, and luxury inventory has reached the highest level we've probably ever seen. We've seen some major headlines about our ultra-luxury segment of the market, and there's a lot of inventory there. Condominiums continue to outperform other residential property types, driven largely by luxury new construction closings, specifically the AMBL. Overall, this is becoming a healthier, more balanced market, certainly not a declining one. So the first chart I want to look at here is Steamboat compared to other resort markets. Before we dive into the local numbers, I think it's important to remember that every mountain town behaves a little bit differently, and Steamboat, as you can see, continues to offer pretty significant value proposition, especially when compared to some of these other Western mountain markets like Aspen, Telluride, Jackson Hole, Big Sky, Vail Valley, and Park City. Steamboat sits at a $1.71 million average sale price. Clients often ask me, what do you think my home's going to do in the short term, midterm, long term? And I often refer back to this chart. I think it shows how much upside Steamboat could see. Of course, Steamboat's its own animal. It attracts its own demographic, but I think at the end of the day, we all know Alterra has invested a significant amount in the base area. There's billions of dollars in investments flowing to base area development with projects like the Stockman, AMBL, which is finishing up, and also projects downtown. So from there, let's look at inventory. At the end of H1, there were 453 active residential listings. That represents a 14% year-over-year increase. And inventory increased across nearly every property type. When we look at active listings by property type, you can see that there is very little activity in land, just 73 listings or 133 million of inventory. The highest unit count available is condominiums with 145 listings or 248 million. And then single family homes, there are 110 listings, which represent $524 million. So again, here you're seeing a lot of these ultra luxury properties sitting in this category, driving the inventory dollar volume up significantly. When we look at active listings by price point, you can see that that high end is taking up the majority of the market share as far as asking price or listing value. So I've broken this up into four categories. You can see entry is below 1 million, where there's 147 listings, 98 million. Core is 1 million to 3 million, 156 listings, 290 million. Luxury, 3 to 5 million, 51 listings, 203 million. And then ultra luxury, which is 5 million and up. And there are just 58 listings there, but $500 million of listing value or inventory on the market. That makes up 46% of the market share. So again, there's a major spike in this ultra luxury product, and the high end continues to push higher and higher. Now, when we look at what's sold, we had 245 residential sales for the first half, and that represents a 9% year-over-year increase, and units sold increased across every category except for land. So you can see here there were just 18 land listings sold for a total value of 22 million, 48 townhomes and duplexes for a total value of 100 million, 50 single-family homes for a total of 108 million, and 103 condos for a total of 174 million. So condos leading across both unit count and sales volume. Driving a lot of the activity in the condo segment of the market is sell-through at the AMBL. The AMBL saw $77 million worth of sales close in the first half of 2026. So let's look at sold listings by price point. Now this chart is broken down by sold dollar volume. And you can see that the majority or lion's share of the market activity happened in the core price range, or the $1 million to $3 million price range, with 104 listings sold, or $187 million, which represents 46% of the market share. You can see the luxury segment, the 3 to 5 million, made up 88 million, or 22% of the sales. Ultra luxury trailing just behind at 75 million, or 19%. So again, we're seeing a bit of a divergence on the supply of the ultra luxury product and the actual sell-through or absorption of the ultra luxury product. It's going to be interesting to see what happens in that segment of the market in the second half, especially as we're seeing a ton of big headlines about this high end of the market. We'll see, what does that sell-through look like in the second half? Jumping to median sales price. Median sales price was $1.44 million in the first half of 2026, and that represents a 16% year-over-year increase. Now, this is really interesting because single-family homes actually declined year-over-year, 16%. Condominiums are buoying this number and ultimately driving that top line year-over-year growth, with condo median sales price at $1.06 million, or 15% year-over-year growth. Townhomes, duplexes, pretty much flat, just down 2% year-over-year. And then land, there's an outlier sale in there. As we saw, there were very few transactions in land, so outlier sale driving that up 45% year-over-year. Median price per square foot for the first half was $830 a square foot. That represents a 3% increase year-over-year. Now, single-family homes saw 2% growth, condos saw 5% growth, and townhomes and duplexes saw 7% growth year-over-year. Now, this is a better benchmark and probably tells the story a little bit more accurately of what's actually happening in the market. Of course, the product mix can influence that median sales price metric, which will have a little bit more volatility. So this is a great metric to pay attention to if you're trying to gauge where is the market now and where is it headed. So median days on market is just 21 days on market right now. That's actually a 5% decline year-over-year. Single-family homes, however, are showing a significant increase. We're only talking about 16 days on market, so pretty low days on market number there, but that is a 60% year-over-year increase. Condos driving that overall decline with only 6 days on market. Again, that's going to be skewed by the pre-sales and the amble. That's a 73% decline year-over-year in days on market. Townhomes, median days on market, 66, massive pop, 113%. Land, 154 days. That's actually 8% below H1 of 2025. Let's take a quick look at rates. When we started the year, the 30-year fixed rate was sitting at 6.2%, and as of today, July 28th, the 30-year fixed rate sits at about 6.76%. That represents 0.5% increase in borrowing cost, and that makes a material impact on buyer decision making. That cost of leverage has gone up, so that's really going to temper buyer demand, particularly those who are financing a portion of their purchase. Let's look at a few record sales for the first half of 2026. So one Steamboat Place unit number 1 sold for $8.20 million. Of course, one Steamboat Place like Edgemont is, I think, benefiting from some of the headlines around these new high-end developments. And I think we're going to continue to see some strong sales in these high-end developments like OSP, Edgemont, even spilling over to Torrey and Plum. As we see these new developments start to sell through, I believe that the rising tide is going to lift all boats, and generally speaking, most condos are going to benefit from that appreciation. Highest price per square foot was the Amble Unit 404. That closed for $2,534 a foot. So big price per square foot benchmark there. Highest single family sale was 2550 Heavenly View, and that sold for $5.895 million. Again, luxury new construction condos continue to redefine the upper end of the market, with several H1 sales exceeding $2,000 a foot, helping drive condo appreciation despite a broader increase in inventory. So some key things to know for buyers and sellers. For buyers, what to know: you have more options. There's more inventory on the market than we've seen. Take your time, be selective, make sure you take time to tour what's available to hone in on what's going to best meet your needs. And also know that you have a bit more negotiating power. Right now, we're seeing about 3% off of list price for the average sale to list price. So you can factor that in when you're looking at pricing and planning and crunching numbers. There's more luxury inventory than we've ever had. So the folks at the top end of the market have a lot to choose from. Interest rates continue to be a big influencer, though we're seeing still a lot of cash transactions. 50 to 60% of the transactions right now are all cash. And just know that a really well-priced home that's in the right location, that shows well, that's new, that's updated, is probably still going to attract a lot of attention and sell quickly. So if you're in that segment of the market, be prepared to move quickly. What sellers should know, it's pretty simple. Pricing matters more than it has in the last 5 to 6 years. I know sellers don't want to hear it, but it's a fact. You need to meet the market. The market is not going to meet you based on what your neighbor's house sold for or based on what your Zestimate was a year ago. You have to meet the market. Have the house ready, turnkey. The more move-in ready it is, the better positioned you will be. Presentation matters. Just know that buyers have a lot of options right now, so you want your home looking tip-top shape. And those homes continue to sell near list price or asking price. As I mentioned, we just sold a 3-bedroom on 1051 Thornburg. It was the highest 3-bedroom sale in downtown ever. That home closed right around $1,100 a foot for just around $3.5 million, right below list price. So key takeaways as we move into the second half of the year: inventory is expanding, creating more opportunities for buyers. We've talked about that a lot. Luxury inventory has reached multi-year highs. We've talked about that a lot. Buyers have leverage, but well-priced homes are commanding strong offers. And finally, Steamboat remains a healthy, balanced market, not a declining one. I continue to remain very bullish on Steamboat. Again, referring back to that Steamboat compared to other markets graph, there's a lot of room to run. It's a wonderful community. We've got a lot of amazing things going on, yet it remains a phenomenal place to live or spend a good chunk of the year. So if you have any questions on this market report, feel free to reach out, ryan.cox@steamboatsr.com. If you or someone you know is interested in real estate in or around Steamboat, please don't hesitate to reach out. Thank you for tuning in. Have a great day.